Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 3rd of February, 2021. This is episode number 1930. Hey, we're 70 episodes to 2000. Amazing, right? One episode a day most days. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. What do we have this morning? Let's hop on over to the Convergent Trading pre-market summary sheet. This morning we have again an allocation to risk on this morning as we pushed overnight through the gap zone from the 27th of January a week ago. We had a gap zone from 38.40 in EES down to 38.06 something, 0650, something like that. And we had hit the middle of the gap last week and come off. And then yesterday we pushed even more into the gap, and then overnight we pushed through it. We're back in the S&Ps at the key 38.45 area. We see allocation coming out of the overnight posture is moving towards risk on, allocation out of safety into risk again. The current leader again is silver, $2.87% currently. Crude oil continues its rally, up 1.02%. The NASDAQ up 90 points, Eurostock up. Eurostock's up 0.53%, the DAX up 0.45%, the S&P minis are currently up $14.50 or 0.39%. Gold is trading at 1839, up 0.33%. The Dow is flat. The Dow currently is down 4 points. This is the current 7 points right now. And the Russell is down 2.4 points or 0.11% in real time. So a clear indication here that allocation is really into risk, but on a mixed basis. There's really it's not unidirectional. It's not very strong or broad, given that the Dow is flat and the Russell, the small caps, are down. So an interesting setup right now. In either case, we've explored higher prices overnight. Overnight, we traded 207,000 contracts in the S&Ps. The overnight inventory is positive about 88%, and only 14.75 points of range. So the S&P overnight session has very quickly collapsed toward its norm, its averages, so to speak. I don't believe in averages, but it collapsed around its norm with an overnight range that is very tight, 15 points basically, completely balanced, completely sideways. However, the inventory is positive as we come into today's session. Now, how do we use that information? What does that mean? Essentially, what this is saying is we're likely to see a pretty choppy, pretty slow, lazy open. The inventory now is 88.5%. I just checked in real time. So that's where we stand. What's on deck for today? You all heard that Bezos is stepping down into I believe it's a board role this summer. Bezos, 57, will hand the keys of the world's largest online retailer to Andy Jassy, head of its cloud division, Amazon Web Services, known as AWS. The company had its report yesterday, just really, really strong. It's incredible how much money this guy has made in the last year. Very, very constant money, revenue is very, very concentrated on Amazon. So that's one thing. the other thing is the now U.S. Treasury Secretary Janet Yellen called a meeting with top officials that was the result of the Reddit Wall Street Bets frenzy to look at tougher market regulation, which is not a good thing. Tougher market regulation for hedge funds, small investors, and stockbrokers. The whole thing with Reddit last week, the supposed market manipulation, which you may or may not agree with. I don't necessarily agree with it because of the mechanics. People don't really understand the mechanics of brokerage, especially in the equity world. The fact that you have 3 days to make good on an investment that you made now puts the broker at risk, and they had no choice but to stop the buying, get more money to open it back up. But people believe anyway, it's controversial. I'm not going to start on that here. But, when the government starts looking at regulating more, I'm always concerned. Regulation has its place, of course, but the Treasury Secretary getting involved is usually not a good thing. And of course, as most of you have heard, the whole GME, AMC, the whole thing is fading off. There's less and less attention on it, which I think is a good thing. Today we got several releases out of the Eurozone. I'll let you check those out. ADP in the US came out at 8:15 Eastern, was expected at 50,000 jobs, came in at 174,000. Remember, this is the precursor to the non-farm payrolls release, which is this Friday. Very strong employment number out of ADP, which is a private payroll processing company. We get market the market PMI final numbers at 9:45. We get ISM non-manufacturing releases at 10. Crude oil at 10:30. Feds Bullard at 1. Feds Harker at 2. And Feds Messer and Evans at 5. Feds Kaplan at 6:05. It is the Fed parade again. And then in terms of earnings, there's a lot that's come out today. GlaxoSmithKline came in with a 51% negative surprise, was expected at 64 cents, came in at 31 cents. Revenue is in line. Sony announced Biogen, Humana, AbbVie, which is another large pharma company, came in a little bit higher than expected. Allstate, the insurance company, eBay, the online retailer, and others, Qualcomm, are all releasing after the market. Allstate, eBay, Qualcomm releasing after market today. Those are smaller issues. So let's switch gears and look at what was expected yesterday. So the primary idea behind yesterday was that we were opening above the prior day's high, which is right here. We were opening up here. And the expectation is, because the inventory was 90+%, if the inventory was plus 90+%, the response saying regulators coming into the financial market is not a political statement. It is a statement about the market. So just calm down. So it's really irritating that everybody's so on edge about their guy or their people. It makes no sense to me. But anyway, expected a responsive selling spree to at least 90 or 87. But ultimately, scenario 1 was looking for a push back to that high at the mid at least. Remember, we left a weak high on this day last week. I believe it was Thursday. We left a weak high when we dropped off pretty strong. And what I expected here is a test of that high at least. So back to the gap mid at 38.23. That was the key target above. And so it pushes it. The expectation is a push through. Now, what happened yesterday was an open drive right off the open. So what we had is a gap from the prior day's high and then an open drive. And what that says is keep your hands off the sell button right off the get-go. That's what that open is indicating. It basically opened a tick above the low on an open drive with pretty good delta. You can see the buying delta immediately going positive here with price. So that's half the battle. And it just says that we only need to focus on one side, and that is the buy side. So what can we lean against on the buy side in order to get long in what looked like a gap and go situation? So again, we have a gap zone below us. We're opening out of range. And so the auction is out of balance. And the question is, does it respond into the gap? Does it open and respond into the gap and move towards the prior day's range? Or does it gap and go and push higher? And so this is the first spot here, the 3804. And then you could see it tapping on this VWAP early on as it starts to accelerate, and we finally get to that 23 target. So there's no chance for it to pull back, consolidate, give us a higher low to get long and push through. This is kind of a breakout market yesterday with two chances on a pullback to get long with a fixed risk amount. So as the market continued higher, we pushed through the gap mid, and so now we're looking for the other side. We're looking for 38.40, and the best it could do was 38.35.75 before it completely stalled out. Look at yesterday's profile. That is an ugly profile, an incomplete auction on the upside. You can see that the market made a point of control at the top and did not extend higher. And taper off. So you could see that it's kind of chopped off. So a normal Gaussian profile, one that explores both sides, looks something like this. And what this shows is this is chopped off with a point of control near high. So the expectation is, even if it pulls back, the expectation is it's likely to take that high out because very simply, the auction is incomplete. Why is it incomplete? It is incomplete because time ran out. Remember, the goal of the market is to seek prices, to seek balance. So it pushes directionally in one direction. So it just pushes, finds a seller, and then squeezes down the weak buyers. The weak hands become sellers, and then it comes back to the other side, consolidates where it came from, pushes to the other side, finds the strong buyers and weak sellers, and comes back to the middle. And what you end up with in this situation is a profile that looks like this normally. And what happens is when we get cut off, then that auction is being governed by time, not by price, and price is king. We're really the market's mechanism is not seeking to run the clock. It is seeking to run out the buyers and the sellers on the extremes and finding equilibrium in the middle. Again, just like all things in nature, the market's constantly seeking equilibrium. No, it's not seeking to blow out your stops. It's not seeking to run you out. Hedge funds aren't out to get you. They're out to get money. You're just either in for the ride or casualty of the process. Really, all of us are. So yesterday, the open right at the low, within a tick of the low, the delta is positive. Overall, pretty strong move up. Later in the session, we start to see expanding rotations down and mainly mainly sideways as the market came to a rest near these highs. So what did we do overnight? This is the full session chart. Full session chart. The session before yesterday's, the day before yesterday's session, you could see, or yesterday's session, you could see very clearly that we've shifted this point of control way higher, and we have a cutoff top, and just as I was talking about, and then the overnight session immediately tests that high, consolidates, tests it again. We take out the gap zone high, and we are stuck where? We're stuck over just right on top of the overnight point of control and below full session mid and VWAP. This is, what is this saying about this morning? Just so you're prepared. What it's saying is it's likely to be a pretty choppy open. There is really nobody in control here in the overnight session. We are on top of yesterday's point of control, which is this black line, not very obvious. Probably, let me change that just because it's so important. Make that stand out a little bit, softer, like that. So you can see the day session point of control is right there, and then the overnight point of control is this maroon, and they are right on top of each other. So these two lines right here, it's kind of dark in here, but the two lines on top of each other, this really is a description, a physical description of balance. And so coming into today, you as a trader are prepared for a choppy open. So you don't commit, you don't get FOMO, you don't push. You're expecting a pretty choppy open, and it's likely to gyrate around for a little bit before it decides what direction it's going to move in. And of course, the direction favors the buyers. 218,000 contracts traded, pretty much in line with what's normal. The range is still 15 points, sitting on top of the overnight point of control, the prior day's point of control, underneath VWAP, underneath mid, in a gap zone. It's very messy. It's likely to be a messy open, but I want to bring your attention to the bigger picture here on the composite. Again, this is not a full session bar. Each one of these bars represents the pit session, the classic pit session, 9:30 to 4:15 Eastern. And we could see we kept a gap zone beneath us, and we have basically moved from the lower, from the balance that we've held here since the beginning of December, we've tested that balance, and we have moved away. We've broken the one-time framing down day before yesterday, and then yesterday we've pushed even higher. We've got our point of control squeezing up above, but we are coming into this big this big point of control area from 2 weeks in a row. We had our point of control in the 45, 48 region, and we're coming in from below. And I described this last week, sometime early last week, mid last week, once we fell. I described this as a pretty formidable resistance area, at least on a first test. So just pay attention as we push. If we push higher, it's no shock to me that the overnight high is resting at 43.50 as we push into that 45. That 45 is likely to be difficult. We are likely to see liquidity sitting there. It doesn't mean it won't break through, but we're coming up on some pretty good resistance, and I expect today, after the gap up, which by the way yesterday closed pretty strong, we had a pretty strong gap, we pushed higher in a trend up, and so we've run quite a ways. Today is expected to be a resting day. I do expect this 35.75 to be taken out in today's session, but let's temper our expectations for today. That is the biggest point I'm making here. Okay, as prices move back up to close to the all-time high at 62, the delta is way lagging down here. The delta is still it's turning positive, but look at how far it is from where it was when we were down at the 3,700. As price moves up, there's less aggression by the buy side because it's a buy and hold kind of situation. And a buy and hold kind of situation, what does that do? It collapses volume. There's less to transact, less business to do. And then the range collapses because it's just buy and hold. We're just kind of everybody, a lot of the participants, early participants, have taken a position and are sitting and waiting for things to take place. And as we push higher, we naturally are expected to get fewer and fewer aggressive buyers as prices move up. Okay, and those are fueled by day traders mainly, who are fading the move up and then end up having to lift the market to cover shorts as the market pushes up. So in either case, last week was a wide-bodied candle, was a bearish engulfing candle, and we are making our way back through that bearish engulfing candle. We've pushed through the mid of last week, and this is a squeeze on the shorts right now into the 45 area. That's the key narrative that you need to keep track of. Let's take a look at what's expected for today. 1 second as I set this chart up. There's a lot to say because there's a lot going on. Okay, so current conditions. Turn this off. Current conditions, what's the expectation? What's the key expectation for today? Today, open auction in range in yesterday's value, on top of the overnight point of control, on top of the prior point of control, beneath the full session mid, full session VWAP. I expect it to sit sideways. Remember, overnight inventory is positive, 88, 89% at the moment. The expectation is chop, push higher, push down, and then tests into this prior high that was put in last week. This area in the 23, 22 region, right down here. So expect 22. Looking for 22, potential poke through here, and then ultimately back to the overnight point of control and a squeeze out of the gap zone, and an attempt at that 45, 38, 45 before it gets some rest. So I'm expecting a lot of fighting, pretty choppy, potentially scalpy trade, with 45 being the upper target. And then above there, of course, the 53 becomes a really important, the next key important test area. But at that point, the shorts will likely be toast, and 62 comes into play. Secondary, it opens, chops for a little bit, pushes higher, squeezes into that 40. Fails to find buyers, fails to find continuation, impulses down, pushes into the 22, and then starts to slip below the closing low yesterday, 38.13, tests that area, and then starts to move back through the range, the thin portion of this range, for a squeeze back towards the 3800, 3802. So this is 02 down here. This is 13 before it rests. So this will be yet another test of the 3800 from above. I prefer scenario 2. It has more opportunity, but more likely scenario 1 is the main idea of the day, and it's more likely, we're more likely to see it gravitating and getting sucked into 38.45 this morning. That's what I'm looking at in terms of main trades, and your main levels on the inside are 22 and 45, the overnight high 43.50, next level down 13.02, next level up is 45, the MC point of control, and the next resistance area is expected to be a 53. That's the next stock zone. Does that all make sense? I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Take it easy. Calm, easy does it. Stay centered.